Good morning, everyone, and welcome to our last webinar of the year, where we'll be hearing from Daniel Kimpton from statementmatching.com, where we'll be asking, are you up to date with the latest AP controls? As you know, the world of accounts payable is changing, with new technology creating new processes and a whole host of opportunities, both for your organization and team, and also for you personally in your career. So during the course of the webinar, you do have the chance to ask any questions by typing them into the chat box in your GoToWebinar panel. You should find that just over on the right-hand side of your screen. And you don't need to wait until the end of the webinar, so please do ask them as they occur to you, and we'll address any questions that you do have at the end. So with that, I would like to hand you over to Daniel Kimpton of statementmatching.com, and he's going to run through the rest of the webinar with you and talk about how up to date you should be with the latest AP controls. So over to you, Daniel.
Great, thanks very much, Ellen. Good morning, everybody. So I'm Daniel Kimpton from Statement Matching, and what I'm planning to do today is to actually use some live data from some of our customer systems to give you some insights into their accounts payable ledgers. And we're really focusing on the controls that they've got in place, in accounts payable to achieve, accurate ledgers. Okay, so I've got to start with. I've got data from 10 organisations, and I've got kind of a summary table where you can see, which sectors they're in. But they've got different invoice volumes, different volumes of vendors, and they've got different ERP systems. And then at the end, I'm actually going to explain how you can take the same approach in your organisation by doing a proof of concept. So why do we have AP controls? If you're all in accounts payable, you know why we've got controls in place. So the key things are, we want to ensure, the supplier liabilities are accurate, so that cash flow forecasting and financial reports are accurate. We want to pay suppliers on time, so I think we've always wanted to do that, but that's become a much bigger thing recently with the prompt payment code with the government. So I think people are paying more than just lip service to it, which I think perhaps has been the case in the past. It's certainly in some industry sectors. Also, from a controls perspective, if you've got control and you're making sure that no duplicates slip through the net or any missed postings, that you have to kind of go and recover. Ultimately, that improves the bottom line. And in accounts payable, I think it's difficult. It's a moving feast, but people need to stay on top of their GRNI or GRIR balances. And then ultimately, if you're in control of the AP process and you're getting your invoices paid on time, you're going to have fewer supplier queries. So what have people implemented so far? So I think most companies have got a procure to pay process in place now. I think what we see a lot of is sometimes procure doesn't speak to pay, and they don't kind of understand each end of the process on occasion. But we do have procure to pay in place. So people are trying to raise more purchase orders. People have got no PO, no pay. So you're having to book things in. You've got your three-way match checks and so on. We've also all got, we've got ERP systems, which again, kind of enable the procure to pay process. But then they also have additional checks in there, around kind of duplicate checking. Obviously you can run payment proposals and, review them before invoices get paid. So we've got lots of system checks. I think most, big and small, customers have gone some way along the line of trying to do, invoice automation, whether that be scanning an OCR or electronic invoicing or portals or even just imaging. Automating the process is trying to actually reduce the manual touch points, and then reducing the manual touch points in theory, should reduce your error rates, or in theory anyway. And then I've kind of got on here, because we're all, most of the, really, you find out you've got an issue in AP actually when the invoice arrives, but the issue rarely sits with AP. It generally sits with someone in the business, and that's because they've not done the front end of the process correctly, like they've not raised their purchase order correctly, or probably the biggest issue is they've not booked something in. The prices are wrong. So as much as you try and idiot-proof the processes to kind of reduce errors from the business side. And then it's at the bottom of the list because I think it's a check that people do at the end of the process, and it's looking back retrospectively rather than looking at it now. But actually reconciling supplier statements, is a key control in accounts payable. So what can go wrong? We've got all of that stuff in place, but what can go wrong? So users do not always follow the process. Same, you could say that in AP. Not all AP users follow the process. They might try and do workarounds to get systems up, to get invoices on. But typically it's business users. They're not doing their part of the process correctly, and therefore, you have problems when the invoices come into AP. Some of the checks that you've got on ERP systems, particularly around duplicate checks, are very basic at best. They expect everything to be the same in order to flag up a duplicate. But we all know that we can get an invoice and we transpose I's and 1's and 3's and 8's, and you can end up with duplicates on the system where it's just one digit different. And I think invoice automation sometimes, I'm not sure whether people always think about it, but invoice automation doesn't mean errors can't happen. It's not going to mean that the prices are right and the goods receipts are present. It's also not fail safe from an error perspective, because you've got to implement the systems and you have to set them up. So sometimes there might be errors occurring, and actually you would have seen it in a manual process, but you no longer see it when it's automated. So we need to actually check whether the process is accurate. And as we all know, users find ways around things. They approve without looking, book things in without the invoices being around, and that again leads to errors. And then again, at the bottom of the list, reconciling statements is all well and good, but it's very time consuming, and it's often the thing that gets left, to the last minute. So what's the ultimate control? And I think, this is getting onto the focus for the webinar now, is actually the ultimate control in AP is to compare the supplier's ledger to your ledger. So what does the supplier say and what do I say? And really, to do that, you need to reconcile more supplier statements. And then, what do we achieve by doing that? So if you're checking what's on the supplier statement compared to what you have on your system, you're making sure that you've got all your documents. So do I have all my invoices and do I have all my credits? We can also check things like, have I got any invoices on my system, which are not on the vendor statement? So if they're on my system but not being chased by the vendor, there could be a misposting, for example. So it could be on the wrong vendor account. I could have debits and credits the wrong way round, where it's an invoice on the statement and I've got it on my system as a credit, or vice versa. Incorrect currencies, incorrect amounts. It could be higher on my system than it is on the statement, and vice versa. But these are all things that we can actually highlight by looking at the statement. So it would have been better to fix the problem up front for this to have not happened, but reconciling the statement will enable you to identify them, and then if you identify them, you can resolve it. And then if you start looking at what the root causes were, you can start focusing on reducing those errors in the future. And also, if you're reconciling statements, if any of you are responsible for the GRNI account, obviously if you've got a statement where it's fully matched, so for example, everything on the statement is on your system, you've got no unpaid invoices on the vendor's account, dated before the statement, then in theory, if you've got any goods receipts that have not been invoiced with a posting date before the statement, then that's a candidate to do to clear those down. And I'm actually going to be quantifying some of these as part of the data set that I've got from our customers. I'm actually going to be quantifying some of these things. So how many and what are the values of missing invoices and missing credits, and what's that like as a percentage of the total spend, that kind of thing. So, reconciling statements manually, we all know the issues there. It takes a long time. It's the thing that kind of gets pushed to the back of the queue because you haven't got enough time to do it. Users don't tend to like it. It's the first thing everyone gets given, when they start in AP, go and reconcile that statement, but you don't want to be doing that every day for very long. And also, if you're doing it manually, there's no audit trail. So if you're identifying errors and then you're having to follow them up, you're having to do it in Outlook and you're having to do it in Excel. There's no real way to sort of manage the follow-up process to make sure that they get done, and also no way to report on it. And if you can't measure it, it's difficult to improve it, because you need to see where you are now in order to then drive improvements and then identify, well, why have I always got the same issues with these suppliers? So I'm going to be kind of going into, how we can actually overcome some of those things. So, what are other organisations doing in this area? So, first of all, they're putting a policy in place. So I'm seeing a lot of customers who are, basically putting a policy in place and actually making sure that, that policy is adhered to. So, they might be reconciling their top X suppliers, on a monthly basis, and then trying to get round, the rest of the suppliers at least once, in the other 12-month period. Or they might have a critical list of suppliers, which might not be based on value. It might be suppliers that you've got on short payment terms. It might be suppliers that you've got early payment discount programs, or, whatever the reasons are, kind of have a defined list of suppliers which are, to be prioritized. Obviously, to do that, they're automating the process, so that they only have the exceptions to manage. And then obviously you need the tools to manage the exceptions, report on the errors, and then actually be able to identify the root causes so that you can, drive improvements. And it's kind of at the bottom, but it should really be at the top of the list. You should engage your suppliers as well, because they've really got just as much interest as you have. If you think about it on the supplier side, so I'm in AR at the supplier. I want to make sure that you've got all my documents, and I want to make sure that there are no errors, because I want to get paid on time. So actually, if you engage your suppliers, they will send you statements, and you've even got options where you can give suppliers access. So maybe your high volume suppliers, you can give them access to the portal so that they can upload their own statements and reconcile their own account, and also give them, invoice status information, that kind of thing. So I've got one slide on, how statement matching works. So it's a cloud-based application, and we get a daily file from our customers' accounts payable system. So basically, we have the same transactions in our system as the customer, and that kind of all goes on in the background. Now, you can also get statements into the system in different ways. So you can either upload Excel. You can submit paper and PDF statements as well. Really, any format that the supplier provides, you can get into the system, and then it'll automate the reconciliation of what's on the statement against what we've got from your accounts payable ledger. And it will do that when you upload the statement, but then it will also do it it will re-reconcile it every day that we get new data from, customer systems. So it keeps re-reconciling statements. So you're always looking at the most recent results. And then basically it allocates a status to each statement. So you get an overall status as well as a statement for status for each line. And then what that enables you to do is then manage the statements based on priority, because you might want to go and look at all the statements where I've got missing credits or missing invoices and go and resolve those first, and so on. It also enables customers to send reports to suppliers. So if you've got a missing document, you can send a report to a supplier to say, these documents are missing, send me a copy. And then while you're at it, you can actually give them the status of the rest of the documents on the statement. So actually for the supplier, they know that they need to send you a copy, but they can also see the status of the other invoices. And you can add notes in the system. You can add flags to kind of manage the follow-up process to, again, if you put a request on a supplier to send you a statement, then, you need to follow it up to make sure that they, follow it through. And like I said before, customers tend to focus on the high volume vendors, because, that's where most of the transactions are. They're the ones that you need to, they're the accounts that you need to resolve. And also, if you fix the root cause issues on your big suppliers, that will trickle down to your, to the rest of your suppliers. And then ultimately as well, you want to have, a lot of proof and visibility for management about where the problems are. And this is going to be another opportunity to highlight, well, actually, the problem's not in accounts payable, it's elsewhere, and these are the reasons. Right, so let's look at some, that's the kind of intro done. So I just want to look at some real data now. So what I've got is I've got a summary table, and you can see on the left-hand side that I've got organizations that are in different sectors. You can see the first column I've got there, the total invoice volume per year. So this is the number of invoices they process per year. And you can see, I've got a telco doing about 35,000 invoices a year, up to a mining company that's doing about 15.5 million. And kind of lots in between. But actually, if you look, probably a lot of them are between the 100 and sort of 200,000 mark. I've got quite a few in that area. You can see the number of suppliers that they've got. The one at the bottom is crazy. They've got nearly 500,000 suppliers, but I've got one, the third one down, they've got 100,000 suppliers and they're doing 360,000 invoices a year. And then, going over, I've got the total number of statements that they reconcile. And the date period for this data is actually over 10 months. So that's what, and you can see the total value of statements they've reconciled over that 10-month period, and then what the average statement values are. So I'm actually I'm going to look at each one of these on an individual basis, and then I'm going to just point out some of the highlights. And I should have said at the beginning that these slides, there's quite a bit of data on there, because I wanted to, kind of show it all. But we're going to be sharing these slides afterwards, so you can actually look at these numbers in your leisure as well. So I'll spend a bit of time going through this first one, just so that you know what's in each of the boxes, and then afterwards I'm just going to kind of point the highlights out. So the top box, this is based on statements that have been processed from January the 1st this year through to the end of October. So basically a 10-month period. So this customer's in the manufacturing sector. They process about 80,000 invoices a year. They've got 3,500 vendors on their ERP system. The total number of invoices that they've reconciled is just over 35,000. So they've done, they've reconciled just under half of their invoice volume, over the 10-month period. And you can see, they're doing about 340 statements per month. So they're doing about 1% of the vendor base per month, and about £500 million worth of spend. And then the next part, the current statement most recently dated. So this is the analysis looking at the basically the statements that are in the system now, which are the most recently dated. So if you look on the first box, I've got from this one, I've got 1,223 statements. So that's effectively, each one of those would be a different vendor. So I've got statements in the system from 1,200 of my vendors, which is about what's that? That's about a third of their total vendor volume. And there's £69 million worth of invoices across all of those statements. And then if you look over to the right, this is what I'm quantifying. So you can see I've got missing invoices. So this is the the number of missing invoices and the value, which is actually quite, they've got £23 million worth of missing invoices, and that's actually 34% of the total statement value, which is quite high. And then on the missing credits, it's £4 million worth of missing credits, and there's 82 missing credits across those statements, which is 6.2% of the total statement value. And then if you move across debit credit mismatch, so that means that you've got invoices on the ledger which are on your system as credits, or vice versa. And then unpaid invoices on ledger, not on the statement. So that means that you've got unpaid invoices on your system, which are not showing on the supplier statement. So if they're open on your system, they're potentially a misposting. And actually they've got, just under £10 million worth of those. So they're £10 million worth of invoices that are on the system, that the vendor's not actually chasing you for. So that's something that you'd want to go and investigate. And then I've got the same statistic for unpaid credits. So you can see I've got unpaid credits on the ledger, not on the statement. And then I've got invoices where the currencies are different, so incorrect currency. And then the last two, this is where the invoice amount is different. So the invoice amount could be higher on your system, or the invoice amount could be lower on your system. But really, I think the glaring stats on this particular example are the missing invoices. 25 million pounds worth of missing invoices, which is 34% of the outstanding statement value, and then nearly 10 million pounds worth of invoices on the ledger, which we're not being chased for. So hopefully that's clear. And then on the next ones, I'm really just going to give you the kind of highlights. So I think on this one, they're processing a lot of statements. This company, so they provide outsourcing services to the government. So you can see they're doing 360,000 invoices a year. They're reconciling about total number of statements. They're reconciling about 1,300 statements a month. Which is quite a lot. And I've got £750 million worth of spend has been reconciled. So the total value of statements reconciled. And then below, the most recently dated statements. So I've got 5,000 statements, currently in the system, and the value is 139 million. And again, the glaring figure on this one again is the missing invoices. So I've got 47 million pounds worth of missing invoices. There's 1,650 of them, and that's 34% of the total statement value is missing invoices. I think if there is a link between these two, the missing invoices and the unpaid invoices that are on the ledger, not on the statement. They've got a high number there. They've got 29 million of those. And actually, the way the system works is when it tries to match the invoices on the statement that are on your system, it expects all the fields to be the same. Now, if one of the fields, like the invoice number, is incorrect or the invoice number's wrong, the invoice amount's different, then it will tell you. But if two fields are different, like the invoice date is different and also the invoice amount is different, it'll actually show as missing. So these two can cancel each other out to a degree as well. Yeah, and the other volumes are not too bad. So this is a telco. Now the invoice volumes are quite low. So I've got 35,000 invoices per year across 3,000 suppliers, and they're reconciling about 200 statements a month. But if you look at the total value of the statements, it's 2.6 billion. Which is quite high, but they're a telco, so they'll be processing some very big statements from their, bandwidth providers. So I know, if you look at the average statement value, it's 1.2 million as the average statement value. But then the stats below are quite interesting. So I've got 584 statements in the system, and their value is 281 million. And then again, it's the third one where actually I've got, missing invoices, 84 million pounds worth is 30% of the outstanding statement value. So there is a bit of a pattern with, the kind of missing invoices figure being quite high. The other interesting one is the invoice amount higher at the end. So this is where you've got invoices on your system which are at a higher amount than what the supplier is telling you on their statement. And it comes to a value of 37 million, which is 13% of the statement value in the system. So that's quite interesting. So mining company, this one looks a lot better. So they're processing 1.2 million invoices a year, so it's a higher volume. Total number of statements reconciled, so they're doing about 400 statements per month. And they've reconciled 130 million pounds worth of statements, in the first 10 months of this year. But then the interesting bit is if you look below, I've got 867 statements in the system, most recently dated, which is 342 million pounds worth. And then if you look at the stats, they're really low. So on the missing invoices, it's 1.5% of the outstanding statement value is missing, which is a big difference to the 30% that I had on the other ones. Now this customer's been using the system for probably twice as long as the first two examples. But I mean, really, everything is near zero. So these are really, really on top of their accounts payable processes. So I'm pretty sure this is my best example actually. But like I said, I'm going to send all of these slides and then you can look at them in your leisure afterwards. So this is a utility. So you can see, 120,000 invoices per year. They're reconciling about 450 statements per month. And that's quite a high spend. They've got £1 billion worth of spend across those statements. That's the value of the statements reconciled over the 10 months. And then looking below, I've got 1,200 statements in the system currently, for a value of 86 million. And then, not too bad, lower on the missing invoices. We've still got 23% of the outstanding value is missing invoices. So there's £20 million worth of missing invoices, which is basically 4,044 documents. But again, if you look at the unpaid invoices, that are on the ledger, not on the statement, it's about, there's nearly sort of 10% or £8 million worth there. So that could be linked with the missing invoices, but you'd have to kind of drill down a bit further to find that. And then the interesting one on here is right at the end. So invoice amount lower. So they've got invoices on their ERP system, which are at a lower amount than what the supplier's saying. And that's 10% of the outstanding invoice statement value, or £8 million, which is quite a high number. So another mining company. What have we got? This is all fairly. This is probably the biggest value of missing credits, actually. If you look at the missing credits, I've got £45 million worth of missing credits, which is 8% of the outstanding statement value. So I've got about 1,000 statements in the system currently, and actually they've reconciled nearly half of their vendor base. They're doing a lot of statements. They're doing about 400 statements a month as well. So a manufacturing example. I'll rattle through these next ones. So they're doing 150,000 invoices a year, reconciling nearly 500 statements a month, about £500 million worth of spend. And again, you can see it's the missing invoices figure. This seems to be the consistent, quite consistently high. They've got 1,139 statements in the system currently, most recently dated, which is £119 million worth. And 30% or 35 million, 6,308 invoices are missing on their system. So it's quite high. And then, so logistics, they're not processing actually many statements. If you look, they've processed 773 statements in 10 months. So they're doing about 70 statements a month. But there's still, still £400 million worth of invoices across those statements. And actually, these are, all the stats are pretty good. You've still got 20% of the value of the outstanding statements are, attributable to missing invoices, about 1,400 documents. And about, they've got quite a few missing credits as well, £2.6 million worth of missing credits, which is about 10% of the outstanding statement value. But the rest of them are all, 0.0 or something. Right, and this is the last one now, and I think this is probably the second best one. So this is a Formula One team doing about 60,000 invoices a year, processing 260 odd statements a month, and that's £93 million worth of spend over that 10 months. So you can see I've got 642 statements on the system, £14.5 million in value, and about 10% of that total is missing. So actually, that's been a lot lower than the average. All of the other ones are kind of minute, really. They're all they're all 0.0. So kind of in summary, what I've done is I took all of those I took all of the data that you've seen on the previous slides, and I did some averages. So the average, missing invoices, the average is, 20% of the outstanding statement value is missing invoices, which equates to 344 million. I've got 5% of the current statements had missing credits, which was a value of 97 million. And then you can see the other figures as we go across. So the unpaid invoices on the ledger, not on the statement, you can see, that was 8%. That was quite a high number on average. And I think, if you do reconcile more statements, it really is the ultimate control. It's the only way of checking, is your ledger accurate? And if you're proactive with suppliers as well, if you're reconciling the statements and sharing the results with them, you're in control of the process. You're going to have fewer queries, better supplier relationships, and ultimately you're going to catch more. You're going to catch more issues, and a lot of those are money related, so you can improve your bottom line. Now, if you wanted to try this for yourself, you can do a proof of concept, and the way that works is you can provide data for up to 10 vendors. And all you need to do is just download the data into Excel. So any of you in AP will be able to download 10 vendor accounts into Excel. We would expect to get all of the open invoices, so basically everything that's unpaid, and then you'd give us the last 3 months or 6 months worth of paid invoices. So that's the data set that we'd be using for the proof of concept. You can provide statements in Excel, PDF or scanned images. So what we would do is once you give us the data and the images, we would put it in the system, and then generally within a week we'll be asking to set up a training session, which is just we do that via WebEx, and it takes about an hour. And the day that the training is provided, that's when your 4-week proof of concept starts, and you can actually see it working with your own data. And we'd have a weekly call with you during that time, just to kind of work through any issues and make sure you're using all the different parts of the system. And we're more than happy to refresh the system, during that time as well, so that you can see that everything updates. So yeah, thanks for your time, and I'll hand back over to Ellen for some questions.
Okay, thanks, Daniel. Very informative webinar. There was quite a lot of data in that, I know. So
yeah, there was. Yeah.
Yeah, it's quite a lot for people to take in and to go through and process. So I know that probably people will have some questions to put forward to you and to me afterwards, and that's fine. So we can send out the slides out to you, and then any questions that come up after that, then please just let me know. In the meantime, we have had a few questions about the slides, so of course, yes, we'll send those out to you, and also the recording as well, so you can go through at your leisure. We have had a question from somebody who just wants to know, Dan, which ERP systems is the solution compatible with?
Oh, well, yeah, if we went, you don't need to go back to that list, but I think off the top of my head on that list, there were people using SAP, Oracle, JD Edwards, PeopleSoft. To be honest, there's not a definitive list, because we need the same data from the ERP system, regardless of what it is. So we have got customers on pretty much every system that you can think of, including some really old school ones like AS400 and some of the green screen ones and bespoke stuff. Because the only data that we're holding in the system is really just some invoice header and supplier data, and generally it's really easy for customers to get that out.
Yeah, okay, so it's compatible with pretty much anybody, really.
Yeah, and the way all customers do is they create a data extract report on their ERP system, and then that runs every night, as like an overnight task, and then it will output the daily files, and then it pushes the files to an FTP account. So it's kind of nobody in finance sees the kind of data syncing. It's really simple.
Fantastic. Okay. Well, like I said, if you have other questions, then do please put them forward to me, and we can make sure we get those answered for you. But thanks once again to you, Daniel, and to all of you for joining us this morning. We look forward to welcoming you back to our 2018 webinar series. And just remains me to say enjoy the rest of your day, and best wishes for a Merry Christmas and a Happy New Year. Thanks for joining us. Thank you.